Morning, everybody. Hope you guys are doing well. Daily bias post is up. Not super clear. Go to the hourly really quick. We've got this current dealing range between high and low. Pretty standard, I think. IRL target and premium right now. That's what I'd like. If you go to the 4 hour today, we're starting to see our first change in the state of delivery. Obviously bearish coming off Monday. We dipped lower, took out the sell side here from Tuesday during Wednesday's London protraction, and then we have this last down closing candle. If we support this, continue to close bullishly, then we'll reach for potentially even up into this gap, sweeping this high, then coming back down, or just at least into premium of that 1 hour dealing range. So on the 1 hour, obviously you've got this up here, and on the 15, a little bit more refined. And there's not really a clear discount IRL over here. There's a tiny gap in there. There's a 5-minute I marked out with this blue box, but PM session high, current target. If you really want to use this dealing range, then we're just dropping a discount right there. I'm liking some bullish movement. We may not even get a true Judas swing lower. I want to see how this reacts, but I guess somewhat of a Judas. And count this as one. Let's see how the order flow holds now. Don't believe there's any news today, so we should be fine from that standpoint. Yeah, I think we have something in the PM. So I'll just be waiting for the standard, 15-minute Judas swing, 5-minute trades either direction. By the way, I posted in the models and reviews channel just the kind of a run through that I use for Notion, how to backtest and what I like to mark out. So if you want to go and watch that, it's about 10 minutes. I'm not going to post it on YouTube, so it's just there in this. I'll just type it out right there. Got any questions about that, you can shoot me a DM as well. So far we're going to look at this 931 up closing candle. If we want to use it as a potential breaker, change the state of delivery. There's no fair value gaps that formed. There's a tiny one right here, but there's not really a larger fair value that's formed since the 930 open, and that first fair value gap typically can show you the order flow, either for the Judas swing, or we can come back and use it as inversion. Why I'm trying to catch up back with the other two. We did have some SMT at the highs, but that was also prior to 930, so. Yeah, no problem. DXY also, I'm not super, let's actually do a DXY analysis on higher time frame. So DXY should be trending up for the seasonal tendency, but we do have super buy side trades lower, holding the bearish order block there, holding about mean threshold of this one, a little bit further up, but we have London low as potential target. And then any inefficiency we can work through. New week opening gap, or that's a new day opening gap. No, it's just a regular gap. That's kind of weird. So as long as we continue to hold the bearish order flow there, that should mean bullish on indices, risk off environment. I'm watching this low down here. So far we've held this order block. looking at this high, 916, it was taken right here, and we still have the bearish SMT, obviously between those two. But if you want to minimize this, only thing I don't like about that is 3 minutes before 9:30, but I don't have to be that precise. What this first 15-minute candle print took out the low again on Nasdaq. YM made or ES made relative equal lows. Got this 1 minute for value up here. Obviously, London low was not tagged either. That's a good 100 points. Yeah, 138 points. We're not trading within a. If we wanted to target ERL London low, we need to be trading up into a premium imbalance. But with the current dealing range, I mean, I guess if you wanted to take from here, we're still not in premium. So I would find it unlikely that London low was taken today. All right, so there's some SMT between these two lows. That's also within kills. Let me mark out 930 here too. Now, the reason I just mark out the times is visually it gives you a better understanding of the power of three. If you don't know where you're looking from, sometimes I'll mark at 8:30 too, but 8:30, 9:30. If you mark those out and get used to marking them out, you'll get used to seeing the open, low, high, close visually from the start, because open is a starting time, low and high are price points, and the close is also a starting time. So if you mark out those starting and end times, you can expect to see the open, high, low, close within that range. So if you want to mark out 11 o'clock too, we're looking at just in this window for us to see a, I mean, right now it kind of looks like an open, low. You could see the high close, especially on if we have bullish SMT on the lows, which we're starting to form here, right? Taking out these lows multiple times. We would like to see a change in state of delivery. So this used as a inversion, last down closing candle used as a change, as a bullish order block. ES is trading much higher now. Like we're about to close above the 15-minute imbalance on ES. Like look, pull this up. This imbalance right in here. Watch if we close above it, we're still going to reach the premium session high, but then that would be your bullish SMT. There's Nasdaq. So there's your closure. I would count that as bullish SMT, right? Now when you see the 5-minute candle print bullishly, aggressively up. We don't have any inefficiencies in here besides the inversion gap. If you want to extend that out, since we don't have an up closing candle, we could actually just fly all the way through it and close above and not reach back into that range. And PM session high is still a good 54 points away. It's your entire week. So look to see if this is now used as an inversion gap, which is starting to form. Let me screenshot this really quickly. Actually, I'm going to remove that SMT and use this one. I'll screenshot. Video from yesterday was also uploaded. So if you missed the stream, there's a recap up, or the entire stream recording is also posted. I think we're slightly above that in, what's it called? In the live stream recording channel, the YouTube vids little section. Anyways, I've got this bullish order block. Since we came down and filled the gap, and we could return this a discount, which I'm fine with. But normally when we have an order block that surrounds, either creates the gap, so something like this, we have a down closing candle range, give for rally gap. If we were to dip into that and we're bullish, that's a nice long opportunity as long as we're in discount. If we also have a fair value gap present and then a order block range is formed on top of it, a lot of times that is a high probability order block to be held. I'm trying to find an example where you would have formed one. And that's normally what breakers and mitigation blocks are all formed as. Like this right here, you have a fair value gap, trades up to it, fills it, leaves it, so no even up closing candle range here. That would be a high probability order block. Starting to hold it there. Same thing with this gap. I'm not going to mark it out, but same logic there. ES now substantially more bullish. Got some volume imbalances down here. I'd like to see those filled. Now, with London protraction and with the weekly model, the weekly market maker model, we can expect price to trade above this and just continue up even to this IRL. But after we take out this high, we've got to be careful since we're going to be trading into this larger 15-minute imbalance with basically no reference points to the left besides maybe the swing lows. But anyways, whenever we're trading to a large imbalance like this, you can expect high resistance moves up and down, up and down, up and down until we reach the target. So just gotta be mindful of that. There's why I'm taking PM session high with the original consolidation. Nice market maker buy model actually in the 1 minute there. That's solid stuff. Anyways. Technically a mitigation block in here. I want to watch how that changes state of delivery is held. We just dipped into discount of that current dealing range. Right there. I guess we still have SMT up here too. Notice how DXY is also trading lower. So if DXY is also dumping off and ES and NQ are trading lower, I'm not concerned with getting in short and thinking my bias is wrong. Unless there's an obvious shift in market structure, like on the 15. Like if we were to close below the 8:15 15-minute candle aggressively, like if this was a drop in the close, then consider switching bias and we'll go top down again. So here is macro time. So notice how it's basically the same thing, reaching lower. So you'd want to see DXY trade above here. For value gap, order block. So if you disrespect that order block, that'd be a good sign for us to look for shorts. But I don't trust this sibi, to be honest. And we still have the SMT holding at the bottom. Now what would make sense is if we drop into discount first. And then we reverse back up to PM session high. It'd be IRL to ERL. So now the SMT has been broken. So now we can now look for, now we can look for potential trade lower. If we were going to short, I'd like for it to turn back into premium into this gap. You have a 2-minute gap that lines up nicely, as well as a 3-minute order block. So go back top down. We do have SMT now between ES and YM and NQ taking out PM session high. And even if you go back to the 1-minute chart, this high not being taken here is bearish SMT. Let me screenshot this. So this tiny fair value up doesn't concern me. Too far in discount. I don't know. I really don't know how I feel about this, because now I'm wondering if this is just a prolonged Judah swing. Like at 10 o'clock, we start to reverse and trade back up into, because this to me looks like some pretty solid original consolidation. I could be wrong, but 15-minute swing high formed with original consolidation slightly below the PM session high, and no real Judah swing with SMT going to 930. Fill the opening gap as well. Yeah, opening range. Oh yeah. So opening range gap completely traded through. I'm gonna mark out 10 o'clock here. Now the question is, are we in discount? Do we tap into discount? Doesn't look like it. Yeah, we just missed it. I'd like to see one last drop lower. Just gonna keep the price action up here. ES is still, see how weak it is? Like we have not taken out that 826 low. So that's SMT for sure. Not taking out the low of 830. Do you have 830 news tomorrow? Is it Thursday? We do. Okay, so it's gonna be a little bit of a more difficult profile today. Can expect 1030, post 1030 to find a setup, or we gotta find a scalp, and here we could kind of be a choppy range. Forex factor was down yesterday. So let me pull up the actual screenshot. There we go. So here's the real USD news. So 8:30 news tomorrow. Unemployment claims. Two profiles I like to see before 8:30 news. It's not all the time. Is the theta and the beta profiles if you have the PDF pulled up. And you can either find setups on those after 10:30 or going into the chop. So we still have not given an entry in premium. Like this is just a tiny sibi trading lower off that. I'm gonna put an alarm down here. It's just a waiting game today. Bearish order block. You can see YM is not weak at all. No indication that it wants to trade lower. I guess we do have this bearish order block in here. DXY's got a tiny 15-minute gap in here. Order flow is still pretty weak. Like all these candles are closing below this tiny imbalance here. So we didn't put a single candle body above it. If you go to your 2-minute or 3-minute, there's probably going to be larger imbalances right in there. That'd be a nice shorting opportunity of a sibi with the bearish order block in premium. Are we in discount now? Just miss it? We did just miss it. If you want to pull it from here, we're definitely in it. I would still say this is the larger dealing range. We just missed discount. All right, so DXY is starting to trade back up. So as long as we can continue with that movement, let's go to DXY. Nice uptrend. Got relative equal highs up here with a premium sibi of this current dealing range. I mean, to be honest, this just looks like a retracement back up into this range and then continues down to the sell side. You can see Euro USD is kind of in a chop too, which should normally, if you're going to use your Euro USD, can't speak, it's going to be in correlation with the indices. Yes, just have 50%, sweet. So we still have the SMT intact, and ES just traded lower into 50%. And Q might have. I'm actually just going to put a line on there. There, NASDAQ just dropped into it as well. So I'm not saying we have to reverse, but if we do dip into this discount, create a change in delivery, I'm probably going to long that first opportunity, the low risk market maker buy model. Because I mean, if you just look at this market maker sell model, I do like the fact that we have virtual consolidation down here too. So it would make sense if we dropped into this gap. Yeah, I would say so. A classification, 10 a.m. reversal. I mean, if you just look at this price leg in here, original consolidation, first stage, second stage, like silver bullet, right? Right in here. Trades lower. Smart money reversal. 5 minute. So this discount fair value gap's on the 5. Right in here. There wasn't one present on the 1 hour 15. So 5 is really the lowest one I'm going to go to. There's your discount for value gap hit. Current dealing range between low and high. That's the first imbalance in discount below equilibrium. Right in here. So if we wanted to go from ERL to IRL or IRL back up to ERL here, this is the one that price is going to refer to. We'd like to see a bounce off this. Yeah, within discount. So there wasn't anything present on the 15 that was obvious to me. Like if you go to the hourly, nothing there in the hourly. 15. I mean, you could use this tiny, tiny one. It wasn't efficiently filled, so I guess that's still valid. But back and forth price action up here. This I didn't want to use. It was too far on premium. So then drop to the 5, and then there's your first one. And it looks like it's going to tap into there. This is what I would like to see right at 9:30. And if YM had sold off a little bit more. But really no solid entry point given within the macro time. Like all this kind of consolidation drops lower, doesn't return to premium, and no breaker. Now, when you're using the macro or when you're using an entry technique, the two that are going to be the safest in terms of when you find an entry, put a stop loss there. You don't have to accommodate for a further fair value gap or things like that. The two that I like to use is either a unicorn setup, so a breaker with a fair value gap. Those do not have to return into premium or discount. So if we have a range, creates a breaker, price does not have to dip into discount of this dealing range. Let me switch this to black. So if we have a dealing range between here and here, and there's a fair value gap up here, still in premium, but there's a breaker, that's a strong entry. If there is no breaker or just we're trending, you're going to want to go long or short, the long in this case, in discount. And that'll avoid a whole bunch of problems, like finding an early entry in premium. Like yesterday, if you saw the setup, just waiting for that trade lower into the discount fair value gap between the current dealing range. This one in here. If you just waited for this, went long in there. There is technically a breaker in here. I don't think we swept. Yeah, we just dug into discount. So, but there's a breaker in here. Tap back into that with the order block. So instead of trying to capture price all the way up here, going long up here and either placing a stop below this or a tight stop and getting stopped out, wait for it to drop into discount or wait for it to drop into a breaker. And there's no other exception for that. It's going to be your two high quality entries when you're using fair value gap. And if there's a larger fair value gap range, it's most times going to revert back to the to the order block. So if we have a larger range and there's an order block pretty far up, then you can either use consequent encroachment of the fair value gap like this to enter, or you go all the way to the premium and wait for it to tap all the way up here. But anyways, dropped into discount. If you want to go from a discount IRL to premium ERL, still have PM session as target with original consolidation slightly below that. So to look for a change in state of delivery, needs to trade above this very shorter block range. Disrespect these sibis. I'm going to watch actually this one. This one's in premium of that current dealing range. Between here and here. But I'm really just only looking for long setups today. So if there's no trade, then I'm all good with that. Now immediately creating these as inversions just with a quick run up, it's kind of V shape, is kind of your first sign for a reversal. So watch to see how this 1003 sibi is used. Like that would have been an optimal entry short. Target's already been met. We're kind of still in, now we're in discount of the large dealing range. It is what it is. Could use the 1 hour order block. Would the current 5-minute candle be considered as a valid bullish close? Yeah, if it closes decently, I would like to see it close like if you split it in half above like the 50% of that entire candle. So with the filter candles, I'm looking for just a strong close. If it's just a weak, tiny one, like an indecisive candle, I'm not too concerned with it. DXY is holding their 15-minute sibi. ES also failing to drop in a discount. So we got SMT there. Same thing with YM. So like this 1005, I wouldn't count that. At least what I'm sifting through. I would like to see it close. Like this next one, if it pops up, takes out that high, sure. It doesn't look like it's going to do that though. May go for the low again. Hopefully though, if you went short, it was within your model. If you were just trying to FOMO in, trying to capture these moves off order blocks, yeah, you probably would have been profitable off of it. But the discipline aspect is so much more important than getting profitable trades, because if you stay disciplined, then it'll come to you easily. In this case, would you look for a possible 1030 to 1045 reversal back up? I would like that. Pre 830 news, normally the 1030 to 1045 window does create a nice opportunity to go long or short. The problem is now we may just trend all the way lower into London session low and have this high stay intact at 930 because we're not getting any reversal at 10. Think about that low being put in between here, high put in between here. Super bearish PA right now. It is what it is. It is what it is. Got a 3-minute sibi right in there too. That would have been your silver bullet short, I assume. We've got a low risk, first stage, second stage. Now we still got, what, 57 points down to London low. There's no volume imbalance present within these two, so don't need to see it trade all the way up into this range. We'd like to see at least tap the order block wick. And London low is down at 17,778.25. So if you want to use that order block tap as an entry with the fair value gap, we did just tag in a premium there. London low target. I mean, it's just a scalp. We don't have tons of inefficiencies lower. Besides maybe this 1 minute gap. And on the 15 we didn't have anything either. Yeah, just this portion. Got this imbalance here. And then just the wicks after that. Consequent encroachment if you want to tag that. Oh, this last candle. Maybe get a rejection off of 791. How could we have switched our bias to bearish to capture the short? It won't be possible. I mean, it would be possible if you were willing to switch that quickly. I was, with how lethargic the move was and no SMT at the high within 930. I would have liked if, I mean, looking back, YM, yeah, I did take out PM session high and trade lower, but it was meandering up here for a while where a short at, and there's no macro entry short, like within premium. This is the only one, maybe here at 1008, that would be within a short-term premium. So for me, switching bias on that would be difficult. Like I said, going long was my preference today. Just looking at the hourly time frame, taking out the lows, London protraction, dips lower right at 2 a.m. That's a standard New York continuation, I think. But I mean, some days you just don't have a trade, which is fine. Like I said, you only need what, like 50 points a week. You can get that either in one trade, two trades, easily. So one little day of poor price action, or it doesn't fit your model, you shouldn't feel like you have to get in. And that's why I'm trying to push, just take screenshots every day, because then when you see the same stuff happen over and over and over, and you're like, oh, I could have seen that setup today. I could have seen that setup yesterday. It removes the fear of missing out because you know the opportunities will be present. So when you can remove fear just by backtesting, just by studying, it makes it a whole lot easier to sit out on moves that you're not comfortable with. So it'd be the weekly profile then of Thursday and Friday bullish, typically if going by ICT's Wednesday low week profile. Yeah, if we do take out that London low, then that would make sense, right? Although, since we have the seasonal tendency, it could just be a screw your longs profile where it just trades lower the entire week. Where's that picture? I need to find that. That's a good weekly profile. I know Rob definitely sent it. I can't find it. Whatever. Yeah, it's just tapped hourly bisi. Oh, we did. Right on the IRL. Holding the bearish order block well. Would you recommend using micros so it'll be easier for parceling at 20 points than the rest at BSL, SSL? Yeah, if you can, it depends on what your risk profile is. But if you are able to take partials and parceling off at either 20 points intervals or at liquidity objectives, things like that, over just using one larger contract, that would be preferred. At least that's the way I would do it. I like having opportunities to take it off or hold for longer, right? Than being worried, oh, do I take it off this one mini off at 20 or do I take it off at the full target? It's difficult to tell sometimes when you only have one. I think we're reversing now. We could. It is a little outside of the time window. I would like to see it reverse. Like I don't want to see it reverse right at 10. If we dipped into discount, created a change to delivery, I would like that. This is a little too far out of my time window for it to reverse. I could be wrong. But this low being put in at 10.12, I want to see that taken and a low put in within this range over here. So it would make sense if we come down, maybe fill that bisi in here, trade back up. Oops. Come down, fill the bisi, trade back up into short-term premium, order block, whatever, then create the low. 1 minute. Right over here, tiny one. Just marking out the speed bumps that we could see on the way down. Don't believe we have a 5 minute. No, we don't. Holding that 5 minute order block too. I'm going to screenshot this. Not trading when you see your model is a huge win. Yeah. I mean, even just like being confident about not trading is a huge win. I mean, the way I think about it is, do you get upset when you look at London session moves? No. You don't get upset when you look at PM session moves if you don't try trading PM. So just like in the AM session, when there's not a clean move, you just don't get emotional over it. We are holding this order block here, this 1014, 1015 order block. I wanted to see it just close at least below here. This wicking back and forth is annoying me. At least below that line. Just drop it. Then we'll reach for this bisi. It's another partial point, and then London low. Right. I think everyone did. Even when you're learning 2022 model, like when I first learned the 2022 model, I would be watching literally from 9:30 till 4 p.m. if I had the time to. and looking for every single setup. I'd be looking for the AM session setup. I'd be looking for the lunch run on stops, the PM session 2022 model. I think I need to just tape read and capture every single one, which in reality you don't. It's so overcomplicated in your brain because you think you need more than you do, when in reality it's almost too simple. Like you use the same model, you look for one setup in a week, and that if you do it right, that's your whole week. Like trading is one of the jobs where, for some reason, there's your low being taken, where less work equates to like longevity and better function of your brain and just of your performance. Like if you work every single day in this, every single hour, you get burned out very quickly and you make poor decisions because you need to stay in a optimal state of mind in order to function properly in this game. So learning when to pick your battles and saving your energy for later a lot of times is the better decision than trying to force a poor setup just because you want the profits, which, you know, it could just create a loss and then um you know, you take a larger emotional loss than you did of just a monetary capital wise. And taking those emotional losses are way more destructive to your longevity in this game than um really than anything else. So preserving that mental capital should be over everything else. So we're tagging to this bisi here. I want to see it probably just print lower, come back up, tap it, and then sink to London low. Already good 30 points given there. Nice. Good stuff. But Kirby was 1 or 2 years ago when ICT went live. I think it was April. He just didn't trade for 3 hours, just tape read, and I realized, well, you don't have to always find a trade. Right. You can see the T market. Yeah, I agree. Like I would even have to, like, for me, it was like I have to take a trade every single day. I would have oil pulled up just in case NASDAQ was poor. I would have everything pulled up just to get into something. And it was like a drug. But yeah, just waiting and being patient and finding that high quality setup that nets you 50 points and you're done. It's almost boring sometimes because then you're like, oh, what do I do for the rest of the week? Get 50 points on the PA trade evals the rest of the week. Yeah, that's the move. Or just being disciplined enough to just tape read it. Like you don't have to not watch the markets, but if you can sit in front of the markets and just watch it and use that as learning experience over trying to get in, you'll find better trades off that. So we tag the bisi. We're going to trade up a little bit further and probably take out this relative equal buy side. I still want to see London low taken. Kind of zoomed in here a little bit too much. Now this sibi is efficiently filled. I would like to see the 5-minute used as inversion. This sibi not sufficiently filled, just trade lower off that. We do have this inversion gap forming down here, which I'm watching. Decided to take the shorts again. Time. So time is the most important part. So the fact that we didn't, You want to see on a normal day a higher low put in between 9:30 and 10, another higher low put in between 10:30 and 11. Obviously the opposite of what you normally use. So if you have a high put in at 9:30 to 10, then you want to see the low put in between 10:30 and 11. So if we don't reverse on 10 o'clock, we start to trade and continues to take the lows. You can trust a move like this to be continuing into 10:30 most times, as well as it just traded up into short-term premium of this current dealing range between high and low here, and tapping an order block with a fair value gap like so. So you can most times trust it as a short, either targeting a discounted balance like this, bisi, or the London low. If price is bearish, could we see a deep retracement to stop out the current shorts before running London low? We could also do that. What I'd like to see preferably is a low, another lower low formed at 10:30 within this range. Maybe retrace back into premium, take these ones out, and then go back all the way down. But you're right, we could just see a retracing back up, probably knocking out this consolidation in here, back in premium of the higher time frame, then back down. We're still holding this inversion gap though. I do have one time-based PDF. It's not a full time-based one. It's just more of a New York AM session thing. Let me see if I can find it. I'll send it in here. This one. It may be slightly outdated with what I use, but there you go. There is a full video explaining it on YouTube. If you just look up that title, like New York session or New York PDF, something like that, it'll come up. But I'll probably just make a full time PDF. Everything you want to know about time frame alignment. It would strictly just be for New York. I'm not too comfortable with PM session or London session. Could be reversing now, yeah. I want to see how this breaker holds. Here's 10:30. We gotta watch this down closing candle range. Discount. So this imbalance right here. That's kind of a lot. I apologize. We'll see how we react off this one. Inversion plus the breaker plus the bear short, bullish short block. Nice strong reaction off the bullish short block with the fair value gap there. Is it normal that most times whenever I take 20 to 30 points But after one loss, I get all my profits wiped out. Just feel like that is kind of hard to scale up in profits sometimes, or am I doing something wrong? It depends on your position size and your stop loss. If you're putting a stop loss that's like 40 points away and using the same position size and trying to take 20, you're gonna have that phenomenon happen. Um, it depends also if you're taking partials or if you're taking full pulls at 20 to 30 points. Like if you're taking partials, it shouldn't, like, for me, if I'm taking a partial, if I have two contracts on, so let's say, and I'm taking a partial off at 20, most times I'm gonna move my stop to break even, just so I can secure that 20 points. Other times I'll keep it wide if there's a reason for it. Like if there's an imbalance that needs to come up and fill, and I'm fine with taking a larger loss because that take profit is maybe 80 points away. That's fine by me. It just comes with feel. Like it's not really something like stop loss management and stop loss placement isn't something that you can teach it at a basic level of like, yeah, here's where you normally put it. On a fair value gap, it's just going to be below or above the third candle. That's easy stuff. But there's going to be exceptions to that rule. Okay, if there's an order block above it, do you place it above the order block? Do you place it at mean threshold? So 30 to 40 points, I wouldn't say is a huge. 40 points sometimes is a pretty large stop loss. I like 40 points. I would cut down on position size. But it also just comes with like, okay, if you have the same position size, maybe you're risking 1%. It should be based on your points. So if you're risking, I don't know, 400, and you have a 20-point stop loss, you can use 1 mini. If you're risking 400 and you have a 40-point stop loss, you can use 5 micros, and you can have to scale down like that. Then also comes the question of, do you want to use 10 micros instead of 1 mini so you can take partials? That just comes with trading preference, though. And a lot of it is just trial and error, to be honest, with placing stop losses. Like if you want to just place a hard stop and not worry about it, that's fine. Like don't even touch it until your take profit is done. That's the easiest way to do it. For me, I like to just be very precise. Like I want to have my stop loss in a exact spot where, it can come within a tick of it and not touch it, and then reverse in the other direction. So I'm very meticulous when it comes to that. Like I'll place it, I'll test out new things all the time. If I get stopped out, it's fine. I'll either re-enter if I'm correct, like yesterday, place a stop a little bit tighter than I should have, came and stopped me out. I just re-entered and wrote it back up. I'm not too concerned with that. But if you want like the most optimal, it's going to come with understanding PD arrays, inversion PD arrays, how order blocks work. You're going to have a full understanding of a lot of things. Like when we have old selling and old buying, how do you use those as reference points? Like if we have an inversion order block and we close past it, most times it's going to create a high probability that we are going to not close past it again. Like I don't know really how to find an example of that. The 5 minutes is probably a better example. Like if we use this bullish order block and we come down and close below it, a lot of times it's called old selling. You're not going to see price close back above that range. It's going to hold price down. So you could use that as a stop. It would be a whole probably like 1 hour lecture of everything you can use. So don't be too concerned with it. If it's something that you struggle with, just use the very simple methodology of placing it above or below fair value gaps, above or below order blocks, things like that. If you're using a breaker entry, a unicorn entry, then use the stop. You can use a tighter stop on a breaker entry. You can most times put it below or above the breaker. So if you have a bearish breaker, something like this, and you have a breaker in here, you can, if the fair value gap lines up maybe right in here, and the normal stop would be up here, you can most times reduce your stop to just the breaker premium end. Since the breaker is a pretty strong PD array, we're not going to pass it. A lot of times you can find good setups off that. So I'm watching how we react off this bounce here. Now, like I said, the framework is where we'd like to see a low put in now between 10:30 and 11. Doesn't happen all the time, but let's watch how these bearish order blocks are holding all the way down if we want to displace through this gap or not. 15-minute unicorn bearish. I'm not seeing it a whole lot, to be honest. Unicorn bearish. Maybe all the way up here. High, low, higher, high. Breaker. Sibi, yeah. See, we're dipping further than the breaker, further than the order block, closing below mean threshold of the bullish order block in here, which is a good sign. Now, this is where if you had runners and you're holding for London low, if we were to drop aggressively through AM session low, you can trim stop to here or even here. So watch this last up closing candle. There's no fair value yet present within it. So it's not a high quality order block. Let's see how this is used. We have a bunch of PD rays there. Also, this gap lines up with it. So, I mean, preferably you could like to see it just displaced because we have so many PD rays lining up here. I want to see actually that order block hold. But we came decently far into discount here. Filled all the way down to the bottom. So you have 1, 2, 3 PD rays, right? So like we wouldn't want to see really a close above this inversion gap. This one right here. It's a longer one. Nice respect of the order block in there. Closing below, wicking all the way up, closing back down. Now this bisi is still inefficiently filled. We just have a wick. So we could see, what I'd like to see is it just drop, come back up, tap it once, and then continue. I don't want to see like another bounce and then it returns back up and does the same exact thing here. On a lower time frame, this would probably be your second stage of distribution. Maybe sub 1, like a 5-second chart. But you can see with these imbalances to the left, these two, how high resistance the move is to get through them. Dropping down, trading back up, dropping down, trading back up, over and over and over, overlapping it. So it does just look like a high resistance move down. This just looks like accumulation. Very, very boring. We did also close below the 1025 5-minute bearish order block. This lower bisi is now pretty efficiently filled. We have a tiny portion in here that's just wicks. So we can allow for it to drop. 1045 is approaching. I mean, the minimum is just this. This is all you want. It's tiny sell side. Let's see what DXY is up to. Still stayed around this entire gap the entire time. I wanted to see it close above, actually. Let's see if we can. Starting to use it there. Got this bullish order block. Such high resistance. You can see how long it's taking. Back and forth, back and forth. But I'm not trusting it's going to reverse here without putting in a lower low. I'm looking at the 5-second chart here, and it's starting to respect the bearish order blocks a little bit better. If it drops one last time, we should see, oh, no, it's not. Would it be wrong to look for longs before the sell side or London low being taken first? I don't think it's wrong. I mean, depending on how we're filling this lower gap, that's the one I was interested in, right? In discount, like we're stuck in it. I would say London low doesn't need to be taken. I would be hesitant though looking for longs before this sell side is taken, unless we just completely destroy this high. If we come up and take out the 1026 high with just an aggressive candle, then yeah, you could look for longs. But so far that we're staying below this bearish order block and holding the bearish PD areas, I'm going to continue just to look for it to go, not to look for shorts, but just look for price to trade lower into the sell side. It is taking a whole long time though. It's 10:45. Like every little tiny drop. This is why trading consolidation is tough. It burns a lot of mental capital. Like you just sit there and wait, or you have to continuously flip bias, and that's not. Flipping bias takes a tax on your mental capital. If you stick with the bias and it goes right to the fair value gap you want to, you get in, it goes right to your draw. That's very easy on your mental. Sitting through something like consolidation, sitting through something like flipping bias multiple different times and accepting you're wrong and trying to scalp the other direction, and that normally happens in higher time frame or even lower time frame consolidation points. You want to, like on those kind of days, you want to be done quickly or accept your loss and be done and not even touch it, because on consolidation days, low probability days, you're going to want to go back and take it over and over and over and over again and try and reduce the drawdown, which in reality, that's just how you blow up. That comes with a lot of just accepting a day is just a loss. But if you're not worried about the outcome, it shouldn't matter. Like you should be worried about executing and following the rules. and then the outcome of the trade doesn't matter anymore because it's just, oh, I just followed, stuck to the model. There's my entry, there's my exit, got stopped out, whatever. So now we're starting to trade a little bit further up. Like this to me, you could even tell in the 1 minute, but we're holding, starting to close more bullishly above this bearish order block. Could be taking stops one last time. If that's true, though, you would like to see the 1048 candle print black. If it's an internal range stop run. Most times when you have internal range stop runs, on whatever candle you're seeing the higher low, that next candle preferably needs to print the other direction. Something like this is not, yeah, see? So it's coming up and trading further than you'd like. Anyways, so came back and filled this very, very slowly and now trading back up. So I'm going to call it there. I'm not going to burn any more of my own mental capital. I'd still like to see London low taken, maybe the sell side, but the profile may just be returning up to premium a little bit further, maybe filling this gap and then coming back down. So if you were able to stay disciplined, even though we traded down 90 points, you should feel proud of yourself, 132 points. If not, journal it, figure out what you did wrong, what the thought process was of why you were unable to resist the impulsiveness, because there normally is a factor. There's one thought, you'll feel the urge to click the button, and there's one thought that you can resist of, okay, do I do it? And you just go, yeah. So figure out what the underlying factors of why you feel the impulsiveness. Why do I feel like I have to press the button? Am I scared of losing? Am I scared of I have to mitigate this drawdown today? A lot of that comes with just self-reflection and understanding how you have to really, really understand how your brain works and what you're scared of. Because 99% of why you lose is related to some sort of fear. Over trading comes with the fear of I don't have enough time. I'm trying to mitigate this drawdown before I need to, when in reality, the next day could give you another 50-point run, and that's it. Over leveraging is maybe the fear of time as well. If I want to pass this quickly, or I want to do this quickly, or I'm not going to have enough trade opportunities to make the same amount with one contract or with two contracts, whatever it may be. So figure out why you're making the same mistakes and then apply the knowledge that you have with your own problem solving. Because as soon as you start doing that, you'll find, okay, now I understand why I'm doing this and how I can avoid it. If you're just trying to go in every day and not change anything, nothing's going to change. So your same mistakes are going to materialize, and the same stuff is always going to show up in your trading. So hold yourself accountable. If you need someone else, you can always shoot me a DM. Psychology wise, I'm good with that. Or you can, I'm sure, DM anybody in this call right now. They're probably either going through the same thing or they have some wisdom to share with you. So same bias. I'm still looking for the sell side to be taken. London lows an extra little bit. But I'm going to step away from the charts today. Nothing much in terms of macro or any ATM model. Hindsight will be a little bit clearer, I think. So I'll back test it and journal it as well. So enjoy the rest of your day. I'll see you guys tomorrow, Lord willing. Stay safe. Get some sunshine if you can. And I will see you guys soon. Peace. Watch, they're going to drop it now, right then as I end the stream. There you go. Thank you. Nice. It's so dumb. And there's your low being put in. Fantastic stuff, bro. And there it goes, all there for London low. Like, come on, man. What was the necessity of this? Market maker models, market makers. Why'd you have to come all the way up here and take? You didn't even take any stops. There's London low. London low. I love and I hate this stuff. Why's it happen to me? Anyways. All right, well, there's your whole model. Low put them between 10:30 and 11 randomly. Can't predict these markets. Can't time these markets. It's all buying and selling pressure. You know, the buy, selling really stopped at this random level. You know, came up. Man, unfortunate stuff. Supply and demand really helped today. Anyways, I'll stop yapping.